Hello and welcome to Building the Premier Accounting Firm. This is a podcast dedicated to individuals that are owners and operators of bookkeeping, accounting, and tax businesses. This is intent to actually give you the insights you need as a business owner to, in fact, become an accountrepreneur, run a successful business offering quality accounting services and getting paid what you're worth. I'm your host, Roger Connect, president of Universal Accounting Center. And for more than 20 years, I've been working with owners as they've both started and built their businesses, offering quality services, training their staff. And in this process, I've made many friends and most importantly, seen people achieve things that they wouldn't have otherwise expected. And this is something I'm very passionate about. Each and every week I have on the show experts, individuals that can share with us insights as to what it is we can be doing to work on our business. And in fact, address those various things as they may relate to marketing and selling, pricing, client onboarding, tech stacks, mental health, just a variety of things that we may want to consider as we're running our businesses so that we can be the premier companies in our areas. Now, as we're doing that, I'm happy to share that I have a guest on that I've been eager to have for some time. It's Sam Mendelson. Sam is someone I've known for a number of years. He's the president and chief operating officer for Value Builder system. He is a person that was the former vice president within the company called Consultation Group. Sam has led marketing for more than 20 different brands and is a highly rated McKay speaker on the market. He is also someone that's delivered over 500 software deployments ranging from marketing systems to full enterprise resource planning systems and corporate performance management systems at companies including Microsoft, Merkle, Howard Jones Medical Institute, and Sun Media. So Sam, welcome to the show.
Hey, thanks for having me, Roger. How are you?
Very, very good. So Sam, I just love interacting with you. You've got a lot of energy. You bring passion to the discussions each and every time. So this is going to be a great conversation. I want to go back a little bit in your history because you're now obviously president of the Value Builder system and running that as you have for a number of years now. I want to get back a little bit further and talk a little bit of your interactions with the accounting profession and what got you to Value Builder.
That's going back ways. Yeah, so it's really interesting. So I'm a CPA here in Canada, and so funny enough, I practiced as a public accountant for about like 12 minutes, and it was like the longest 12 minutes of my life, I think. And the reason why I say that is because I love accounting. I love the concept of it. I love measuring the business, understanding what's driving inside of the business. How does it work? How does it generate money? All those kind of really cool things that I think accounting is all about. All of the boring stuff, and I don't think tax is boring, by the way. I also don't think compliance is boring, but all the things about the historical reporting, like, Roger, how did we do like last month? And like we're off by $5 and we're off by a couple bucks here. Like that stuff bores me. And I did it for about 12 minutes. And at like the 11th minute, I'm like, I can't do this the rest of my life. I got to get out.
So becoming a CPA is definitely a big accomplishment to get that far and then say, I need to get out. What did you choose to then do at that point in your career?
Well, that's a great question. I chose to stay as I still call it an accountant, but I chose to actually go work for a company called Profix Software. And Profix, it's still around today. Really cool company. Sold for about I think it was $500 million 2 years ago. And what it does is budgeting, planning, corporate performance management, reporting, and analytics software. And so imagine, like you almost, and this was my job as a consultant, like I'm told like, hey, Sam, congratulations. You get to fly to like Dallastown, Pennsylvania. True story. City of 4,000 people with one traffic light in it.
Wow.
And, you're going to help the CFO implement a new budgeting and forecasting and reporting solution. Good luck. And obviously, like, I knew nothing about that particular customer, that industry, how they budgeted, how they forecasted, what kind of systems they had, like whether they were running like I don't know, SAP or whether they were running QuickBooks. I had no idea going into any of these projects. And it was almost like, hey, go figure it out, and make sure that the client's happy. And don't forget to bring back a check for everything that you build and a smile on the customer's face, right? And so, like, that's still a lot of accounting work. Like, you got to understand the customer, right? I mean, you got to understand how they're making money. You have to understand their revenue models. And and how they report and why they report that way, and be able to ask the questions and understand the business, the customers, the vendors, the employees, the model. And so I used my accounting for good, for a short while until I went to the sales side.
It's like the dark side is what you're saying, right?
100%.
There you go. Okay. So you leave that company. Tell me about the transition to then get involved with Value Builder, working with John Warlow.
Yeah, that's a great question. So I actually left that company. I went to work for a competitor for a short while, and then I decided I kind of wanted, I wanted to work for a really large company. And so the company that I went to work for was called Jonas Software, and it's actually one of 6 operating divisions under Constellation Software. That's one of Canada's largest software companies. And there, I was the vice president of marketing, and at one point, I actually and I did marketing for 17 of their brands, built an agency within there that serviced a whole bunch of their different operating units, because all Constellation Software does is acquire vertical market software companies.
Okay.
So think of it as like, hey, instead of acquiring, let's go down like the Sage path, because, and I'm sure you're familiar with like Sage, Peachtree, and Timberline and all that kind of stuff, right? So, Timberline is like a construction vertical market software that Sage acquired, but that very well could have fit under the Constellation model. Constellation has acquired, vertical market softwares that do accounting in the construction space, golf space, fitness, education space. Each one of these are software companies within the vertical market, and they usually try to acquire the number 1, 2, and 3 within that space, so that it doesn't matter who the customer chooses, you're still choosing Constellation. And so I went to work there. And while I was there, at one point, there was an opportunity for me to become the vice president of professional services for one of these very large divisions. And so I did that, grew the company, like grew the software company itself, and grew the team within there. And while I was there, I got exposed to M&A, mergers and acquisitions, because Constellation does, a whole bunch of acquisitions through their operating divisions.
Yeah.
And like, that was fascinating, Roger. Like just unbelievably fascinating.
What did you like about it? What was fascinating?
So, it's this funny thing, like if you think about it, and this goes right to Value Builder, by the way. So if you think about it, you got a buyer and a seller. Okay. And in that case, Constellation's, or Jonas is the buyer, and you've got like the seller of like the software company who's been operating it for, 10, 15, 20, 30 years. And that owner doesn't always know what kind of value they have sitting there. Like they don't know the worth of their software company. And it's really not complicated. Like you look at Constellation as a company, and I love Constellation. I mean, it really is a very cool company. And at the end of the day, what they're doing is that they're acquiring the cash flow of these software companies. Okay. Because, software companies work on a subscription model. Customer pays every single month, and, away you go. And the value of that subscription is worth a lot to Constellation, but some of the owners may not realize that.
Yeah, because they're looking at churn rate, they're looking at recurring or lifetime value of the client.
Why don't we go to something really simple, like super simple? Okay. Let's talk about like a software company that produces, I don't know, like let's call it, I like construction software. That's what, that's what I worked in that division. So we'll go with construction software.
Okay.
And like I produce construction accounting software, and I save the average construction company, I don't know, like 2 headcount. Really simple. Okay. So 2 headcount is, let's call it $50,000 a year per person, is $100,000. But all I'm charging for my subscriptions, like, I don't know, $300 a month. Most software companies, like most companies, don't necessarily realize the value that they're generating for their customers. And so if all you're doing is charging $300 a month, but you're saving that customer $100,000 a year, somebody with a buyer with a better understanding of the market, of the customer, of the problem, is going to turn around and be like, I'm going to acquire you, and I'm going to jack up all of your customers' fees from $300 to $1,000. And immediately, like I just increased your revenue by 3 times. And this happens, by the way. I just increased the revenue by 3 times, and I didn't even pay for that because you didn't realize the value that you were sitting on.
Yeah. And so when you were in the M&A space, were you going in and seeing these opportunities? Were they apparent to you as you were looking at them?
Very, very, very apparent, very obvious. And, you do what anybody else would do, right? You kind of look at it, you're like, oh my God, this is a gold mine. Wow, we got to buy this thing. This is crazy. But you have a poker face at the table.
So when you were involved in that, did you actually see the transaction all the way through, or were you just finding those opportunities and starting the conversations?
No, it was at various stages, right? So if you think about it, and I think that this goes, for Value Builder as well. Like very few times does a transaction actually just kind of drop into your lap and that's it. Where like the business owner wakes up and goes, "Oh my God, I got to sell this thing," and within 30 days it's sold.
Yeah.
So usually it's the other way around. It's like it's a very personal. I mean, for a business owner to sell their business is a very personal thing. I mean, they don't just wake up one morning and say that they're going to do it and that's it. And so there's different ways to go about things. If you want to buy a company in a particular space, start by going to those industry trade shows, meeting those business owners, and they may not be ready to transact today, but you stay in touch with them. And when they're ready, you'll be the person that they might talk to and say, "Hey, listen, I know you've shown interest in my business before. I'm now kind of open to this thing, right? So, can we have a conversation?" That is one of the strategies that not just Constellation, but any good M&A consolidation or roll-up type of company or PE or whatever it is actually do. They'll go to trade shows. They'll shake hands. They'll meet all these guys, all these business owners of these different businesses, and they'll just kind of keep in touch with them and wait for the timing to hit. And when the timing hits, they're there with a check.
I love it. And as accounting professionals, my listeners, what insights did you get from the M&A experience as it would apply to the accounting? When you went into a business and you saw well-prepared accounting numbers, how did that change the valuation? How did that impact the experience? How did that accelerate the experience?
Oh my God, this is such a great question, Roger. Okay, so like this is something that I just found beyond fascinating. So as most accounting professionals know, like there's, like somebody shows up and says, "Oh, I want to buy your business, Roger. And, hey, by the way, do you have some numbers and data and information that you can share with me?" Right? Well, like the amount of time that elapses from when a request is made for information to when the information is like comes back from the seller, or from the potential seller, like think of that as like every second means that the value of the company is going down.
Oh my heavens. Great analogy.
All right. Like think of it like this. I go, "Hey, Roger, do you have a list of all your customers?" Like if you produce that in 5 minutes, I'm like, okay, cool. Like this guy's got it. But what if it takes 4 days to get that? This guy has no idea. My God, he must be, opening up a Google spreadsheet and just typing in names and numbers and like, right? Like that's what I'm thinking.
So when you got numbers from the accounting professional and, you had the history, you had clean books, they were recent in the sense that you're not just getting the last year's tax return numbers, you're actually getting last month. It was just recently closed. Did that cause you and your team to have a different conversation?
It's a completely different conversation. It's a conversation where your processes and your systems and your story align. Because what you told me and the information that I'm looking at and how quickly you were able to consistently produce that information all align, meaning that there's not a lot of hidden things.
Yeah, I'm loving this. This is good. All right, so that puts you in a position where you're clearly involved with the M&A. You're having fun there. You're excited about it.
Yeah.
What's the next step? How does that get you to Value Builder?
Yeah, so I got a call and, it was like, "Hey, I've got this opportunity. You want to come run Value Builder?" And I'm like, wow, like this is really cool for a number of reasons. Okay. Number one, I think that so if we talk about Value Builder, what we really do and why we exist is to help is really to help business owners. We call it level the playing field, right? As they approach their exit. And here's what that means. If a business owner doesn't know the value of their business, like what's truly driving the value of their business, when a corporate mercenary, if you will, an Excel sheet junkie shows up and says, I think your business is worth $5, that business owner has no idea how to validate whether that's true or false.
Yep.
And I mean, like I can share, personal stories. I mean, my parents are both entrepreneurs. Just around 2017, like my mom actually sold her business, and like she sold it, it was okay, but like it could have been a better transaction, like just overall the integration, the whole thing.
Okay.
And I think that what I learned from that, it was really crazy. Like she sold the business, and then she called me like, I don't know, it was like 2 months later, and she's like, I need your help. Oh, give me a second. She calls me and she's like, listen, I really, really, really need your help. I'm the buyer. They're trying to do this, this, and this. That's not what I thought I agreed to. Like, you really got to help me clean this thing up. And I'm like, okay. So I went in there, and it took me 2 years to clean up the mess. Like there was like accounting problems. Like there was a whole bunch of issues in there that like just kind of transpired because they did a terrible integration.
Okay.
And like I kind of sat back, so that would have been like 2018. And I kind of sat, and I started Value Builder 2019. And I kind of sat back and I'm like, wow, like this lady, my dear mother, is quite lucky. Like if I wouldn't have been around, by the way, I called her lawyer that did the deal. He didn't care. I called the accountant that did the deal. He didn't care either. I called the broker that did the deal. He told me he was done, right? Like these were all individuals that were paid like a lot of dough in order to do a deal. And as soon as like the ink dried and the check cleared, like they were nowhere to be found. And I kind of sat there and I'm like, this is so unfortunate. Like, why should she be left holding a bag when she paid all these guys to do something and they didn't look out for her? They just looked out for themselves. Yeah. And at the end of the day, like here I am, and she's lucky because I know what I'm doing. And it took me still 2 years to get her out of the mess.
Wow.
Right? And so like when Value Builder came along, I'm like, oh my gosh, like here's the person that we're trying to help. It's my mom.
Yes. This right? is awesome. Well, one, I love that story of your mother because I've experienced similar things. I'm amazed at how often I have connections with individuals and on a personal level. And for whatever reason, they just don't tap into it from a professional perspective. So here you were with this experience doing M&As and such. And for whatever reason, your mom clearly didn't kind of say, hey, son, I'm going to sell my business. Do you have any thoughts or insights? She worked with another attorney, another accountant, another broker. And here you are coming in after the fact. And I've experienced similar situations where you have this skill set and the friends just don't typically tap into it. They use other means. I find that fascinating, by the way.
You're so right. Like, I mean, by the way, it wasn't like she just showed up and said, oh, I sold. Like, it was more like, it's like the small things. It's like, oh, I'm going to sell my business. I think I found an accountant. Okay, cool. Like what am I supposed to respond to that, right? Like, what do you respond? You're like, okay.
I totally relate to all this. I think this is something that's just fascinating. All right. So, by the way, was it John that called out, that contacted you?
Oh, no, it was actually through a recruiter.
Oh, got it. Okay, very nice. Yeah, love John. John Warlow is amazing. Okay, so you're interviewed, you get the position. Tell us a little bit about Value Builder.
So, so as I was saying, I mean, we help. Our whole mission is to just help business owners make sure that they get the value, that they really maximize the value of their business, or that they get the amount that they should get when they go to exit. And we do all of that through advisors. And so, an advisor ends up being a broker or an accountant, or a financial advisor, or a coach, or a consultant, or a wealth manager. These are all advisors that are the most trusted advisor of that business owner, who's going to give them the advice and the expertise to effectively work through what is the best way to make sure that the business owner understands the value of their business, understands where the gaps are, has a clear understanding whether they're going to regret their exit or not, and whether they're going to get enough money out of that transaction to fund the next chapter of their life. Because if any of these things are not aligned, like if I turn to you, Roger, I'm like, hey, great news, I can get you $3 for your business. And you're like, wait a second, like I need $5 in order to live the rest of my life. Like this didn't work. If you're like, that's great, but I really wanted $10 for my business and I'm going to ruminate on this for the rest of my life if I sell it for like $3, like that transaction isn't going to make you happy, right?
That's right.
If you find out after the fact and you're like, wow, I sold it for $3, but it was worth $8, like you're not going to be happy. Like these are all things where you kind of look at it and you're like, this isn't going to work for, Roger, the guy that built the business, the guy that put all his sweat, tears, and everything into the business. And so that's really what we're trying to do, right? Like make sure that doesn't happen.
Well, the thing that's very important to me is from the accountant's perspective, I think the profession is going through a big change, and it's nothing new, but it is something that's still an issue of importance, I'm going to say. And it's what we were talking about before we started recording. It's the fact that in accounting, I think there was so much of a move from the historical to more of the present to now we're needing to, as a profession, help our clients with the future. We've got to be able to give them more of an understanding of what's going to happen in the business, not what happened, not what's happening, but what's going to happen. And part of that is recognizing that the business owners, the clients that we're working with, need to have a better understanding of the valuation of their business, at least an idea of what they're building. They're building this, and if you're familiar with the Winchester House in California, it's this house that's a mansion where it was basically hodgepodge together by this, and I'm just going to use the word crazy lady for simplicity. The point is you're building this business and you're building it to your liking, but does it have any resale value? And what we're looking at is, can we build something that is actually of worth to someone else? Because at some point, the business can go on in perpetuity, but we're going to somehow move on, whether it's life decisions, life changes, whatever. And as accounting professionals, the better we can prepare our clients for that exit, whether it's expected or unexpected, the better we're doing.
This is so interesting. So very, very interesting. So I'll ask you something. How often, we asked this question in our Value Builder score, the 44 question, 15-minute questionnaire that helps a business owner understand how sellable their business is or where the gaps are in their business.
Yep.
And we ask a question, which is like, hey, who do you turn to when looking for advice to, I think it's sell your business effectively, right? But who do you turn to? Who do you think the top people are?
Well, it's definitely not the ones you would assume. I mean, they might say lawyer, they might say financial planner, they might say a broker, they might say a tax person, but as important as each of them are, do they go to their accountant, right?
That's the one. That's the most interesting thing. It's wild. So top two people, my accountant, my peer, like another entrepreneur, another business owner.
Okay, yeah.
And by the way, they're even, that's in our data of over 70,000 questionnaires.
Well, I'm glad to hear that the accountant is at the top simply because of the fact that they obviously have the numbers. So there's a variety of ways to assess the valuation of a business. I think there's 7 typical ones, 4 common ones. You definitely have EBITDA that you can look at. So when you're looking at EBITDA, obviously that's just an equation based on the financial reports. So the accountant is an obvious person to go to, but that isn't the only way to value the business, and the accountant should be familiar with some of the other variations.
Well, I think it's even a more interesting question than that. So okay, we could value a business and say, listen, we looked at the assets, we looked at the discounted cash flow, we looked at comps, right? Comparables,
comps.
We did all this stuff. But at the end of the day, the real value of the business is whoever walks in the door and cuts that check and says, yeah, this is what it's worth to me.
It's in the eye of the buyer.
Right. And so I think that's one of these things where it's, it's really tough as an accountant because I there's no MSRP on these businesses, right? There's no manufacturer suggested retail price.
Nope.
It's whatever somebody's willing to come in and have a conversation around. And so I guess the big thing is that if like what are accountants turning to their business owner clients and saying, hey, that's great that you want to sell your business, and by the way, like here's the process that we're going to go through to make sure that you get the most amount of money.
Well, if you can, let's go into the 8 drivers then. This is what I'd like to discuss.
Yeah.
The way John Warlow presents it is, I think, very, very well done. He obviously in his book, Built to Sell, brings up these 8 drivers, and he helps the business owner realize that there's an assessment that can be done of a business, much like an appraiser would go into a home. And essentially, the business has this valuation that the outside person, whether it's a buyer, venture capitalist, a lender, they're all coming in with the perspective of saying, how do we assess the risks that are inside the business? And how do we say where the company has positioned itself well? And when you look at the 8 drivers, those are clearly the great places that a business owner can spend their time building their company, working on their business. Would you agree with that?
Totally. Like I find those 8 drivers to be tremendously fascinating because they're not rooted in what I'll call like typical valuation, like accounting valuation.
Yeah.
So like let's talk about them. I mean, the most obvious one is hub and spoke. How and that's the name that we give it, but really what it means is how dependent is the business on the owner.
Yes.
Right. And obviously nobody wants to buy a job. So that means that a business that is dependent on that owner showing up every single day is not really going to be very valuable.
Mm-hmm. Yeah, because what you're looking for there is whether or not there are key employees, individuals that are involved with the day-to-day operations, that when the business owner is removed, the operation of the business continues as it was. The clients are still taken care of, the work gets done. That right there, hub and spoke, is one of the ones I enjoyed discussing with the customer or with the business owner, because when they realize that they need to build, and these are my words, a business that's a self-sustaining, living, breathing entity that operates apart from the business owner, that's when they have this epiphany of they've moved from, like you just said, a job to being not just living a great lifestyle, but being an owner of a business. And that's a huge transition for a lot of the business owners that thought that they had great value in the work they were doing.
Yeah. Well, I mean, like, let's think of it like this, right? Because it's so fascinating. Let's grab 2 businesses. Let's say that each one of them makes $1,000. Okay. Their gross margin, each one of them has like, whatever, 80% gross margin. They're doing great, right? $80. Okay. Or $800. And then their expenses are both whatever, $400 or whatever, right?
Yeah.
So their profit, let's call it EBITDA, right, is like $400 each. One of them has a professional management team. He's not drawing a dividend. He's not doing anything. He's basically just letting the business sit there, produce cash, and that's it. Okay. The other one, the guy doesn't have a management team. He's doing it all on his own. He's talking to every single customer. He's talking to every single vendor, every single order that comes in. He's swiping the credit card for. Like, on paper, they both look great, right? Like they both look the same. Like, if I were to just look at their P&L, like they're identical, right? They both have the same revenue number, the same gross margin, the same expenses, same profit margin. Like, they look identical. But I can tell you that first one is way more valuable by a multiple of God knows how much versus the second one. Like, who wants to buy the second one?
Yes. You're buying a job, and you're running the risk that the business won't be the same once the transaction happens, because when the owner leaves, you don't know what's going to unravel.
Totally. Right. And just to your point, I mean, like, it goes beyond that, right? Like, oh, what happens if we have a business where, like, again, like, we're looking at revenue of the $1,000, I've got 100 customers, each one of them paying $10. And in the second company, I've got $1,000 and I've got one customer making up $999, and I have my cousin who's my second customer for a buck. Right? Like, where's the risk in this, No,
that's an excellent example of, obviously, the valuation teeter-totter, and at the same time your growth potential. You've got a lot of things here that come into play as to how that business is valued that are beyond the P&L, as you were describing. So this is an excellent example.
Yeah, and I mean, at the end of the day, I think the best way to kind of describe it is that those 8 key drivers are the lens of the buyer. It's like how that
Yeah.
buyer is going to value the business from their perspective rather than the owner's perspective. Because, I mean, we all love our kids, and a business is just really a kid of an owner.
Well, the way I look at it is those 8 drivers are similar to going and buying a home. When you go to buy a home, does it have a garage? Does it have a swimming pool? Does it have 3 bathrooms? Does it have 5 bedrooms? You're going down this checklist of what that house is going to consist of to meet your needs. Well, it's the same thing with the business. Am I buying a job where I'm going to have to come in? What's the cash flow that I'm going to have to come up with as I acquire the company? What's the growth potential? Is there recurring revenue? You're going down this checklist of, okay, give me a behind the scenes look at the P&L as to what makes up this business model. And as you go down this checklist, the more that you can check off in a positive way, that increases the valuation of the business. The more you can't check off and are at risk, they now lessen the valuation of the business because they're things that need attention, need to be fixed, or are concerns that need to be addressed when taking over the company.
100%, 100%. And I mean, like, so here's the thing. So, for most of us accountants that got our CPAs, I don't think they ever talked to us about this in school.
I don't think so either. I think so. This is where I'd like to go with this. I think what happens is the accounting profession today needs to recognize that the value that we can bring to them beyond the bookkeeping and accounting, beyond the tax planning and preparation, is at the CFO and advisory level. At that level, we can impact operations within the organization as it relates to cash flow, accounts payable, receivables, relationships with the lending institutions, venture capitalists. We're at that CFO level really able to impact the business model. But more importantly, in an advisory space, we can help the business owner really take off the blinders and work on their business. And in that advisory space, as a value builder provider, we're able to address these specific things that we're talking about today that really 3 years, 5 years, 6 years from now, enhance the multiple of that business immensely and really can change the business model because we were talking about things beyond just the P&L.
100%. I think that this is one of the most interesting parts of what accountants can do. Like we can all figure out how to, minimize the tax, and we can all figure out whether somebody, our compliance inside of the business from an audit perspective is okay. But there's something to being able to have a strategic conversation with a business owner where you look at that P&L, where you start asking the questions, where you start looking at the business model and trying to understand, like, hey, like, is this a sound business? Where are some of the holes that my client, the owner, may not be seeing today because they're just in the business and they're not working on the business? Mm-hmm. And how can I give them guidance? Like, how can I actually help them? Because every accountant I talk to, like, it's a pretty noble profession. Like, we all want our clients to do well. Like nobody sits here and gets upset and jealous and is like, oh, why is my client doing better than I am? Like, that's not what happens. Even when I talk to accountants, I'm like, hey, are you sad when one of your clients sells their business? Because it means you might lose a client. And they're like, I've never heard an accountant say, oh my God, yeah, it's the worst thing that ever happens. Like,
agree with that.
Never, right? They're all like, I'm happy for them. Like, they worked really hard. But how, like, accountants need tools in order to be able to, and this thing that I've realized, like, it's like just like we have tools like a P&L and a balance sheet and a cash flow statement to help us look and value a business, accountants also need tools to help them understand where the gaps and the holes inside of the business are so that they can help those clients of theirs.
I love this. So, real easy, obvious question. When should a business owner have a conversation with their accounting professional about exit? I mean, how do we bring that up, and why is it important for us as accounting professionals to have that conversation?
That's a very cool question. So I was interviewing one of our advisors, and she said something to me that I think will resonate for the rest of my life. And she said, your business should always be showroom ready.
I love that.
Right? Isn't it cool?
Yeah.
Right? And I said to her, I'm like, her name's Linda. I'm like, Linda, what do you mean by showroom ready? And she's like, think of, you've got a car, all right? And you never know when you're going to sell the car. So you always want to be able to drive that car into the showroom and just tell them, here, like, take it, right? Like, sell it for me.
Yeah. So this is funny because I remember a conversation I had with my wife years and years ago. We were selling a car, and what was fascinating is to sell the car, we went and cleaned the car, washed the car. And she's like, and she said this, it's really stuck with me. Why do we clean the car right before we're selling it? Why don't we clean it when we're owning it?
Right.
And the same is true with the house. Why do we fix up the things around the house right before we sell it? Why don't we fix them while we're living here? And it just goes to the point of, why do we clean up the house before we have guests coming over? Why don't we just live in a clean house? That's my point.
I totally agree with you, right? It's like why, yeah, like, why wouldn't I fix the problems like as they come up, right? And all the things that I hate as I'm living today, rather than just wait until I'm ready to like sell it, have a customer come over, right? Like, it's a funny thing.
So there's a show on, I think it's HGTV, where it's called Fix It or Flip It. And I always bring it up when I'm having conversations with business owners because it's in the same conversation that we're having. And it's the idea of, imagine you don't like the home you live in. And you basically say, look, it doesn't have the amenities we want. It's not conducive to our lifestyle now. We need it to change. And you've got two people that walk in. You've got somebody that's a home remodeler, a designer that basically hears your interests. And you've got somebody that's a real estate person that can come and help you buy a new home that meets your needs. And the question is you go away for 2 weeks, and the show basically says the remodeler designer is going to take the footprint of the house and fix it to meet your needs as they understood it. The realtor is going to go find a new home. And the idea is, who's going to win when the people come back? Do they want the new house, or are they excited about the place they're at now as it's been remodeled? Well, when you work with a business owner who's frustrated with their business and they're just exhausted with running the company, and you come in and you help them fix their business to where it starts to run like a well-tuned machine, and all of a sudden at the end, they're like, if you would have asked me 2 months ago, 6 months ago, a year ago, do I want to sell? I'm done with this place. I'm tired of it. It's just so stressful. But now that it's humming and it's a goose laying these golden eggs, you're all of a sudden saying, why would I get rid of this? I love this place. I want to stay around. I don't want to sell it. Or you sell it and you make a buttload of money off the business that you fixed, right?
100%. By the way, do you know how often that happens? Like, I've interviewed, I don't know how many advisors, and they're like, that's the story, Roger. It's literally like, hey, the business owner, and this happens to brokers all the time, by the way. Business owner shows up and goes, I'm tired, I'm done, I can't do this anymore. Let's get rid of it. Broker says, hey, like, the business isn't worth very much. Like, we got to fix it. They start fixing it.
Yeah.
And then the business owner is like, I don't want to sell this thing. I love it.
That's right. No, this is so good. All right. So here's the question. Here you are, an accounting professional. You realize that you have, with your experience and background, this opportunity to move into that CFO advisory space and have these types of conversations and interactions with your clients, getting paid for it. How do you make that transition into this advisory space? How do you do that? Any thoughts?
Yes, 100%. So this is really simple. So every accountant has the most golden opportunity at least one time a year. And it's, I did your tax return, Roger, for you personally, for your business, it's great. I have to sit down and actually present this thing to you and kind of walk you through, like, why are you giving Uncle Sam, or in our case up here, Justin, like, a lot of money, And like, that's the perfect opportunity to have a conversation around the business, their personal finances, like anything and everything that the accountant wants to talk about. Like, this is the moment. This is the time to shine where you can be the accounting hero for the next 12 months.
That's right.
Right? And I wonder how many accountants really take advantage of this.
No, what they do is they hand them the return, have them sign it, and go back to the bookkeeping. Go back to the tax planning. Yeah. Yeah. So I'm curious. I had this conversation at one of the Value Builder summits with a number of the advisors at the table. I'm curious your perspective, though. When offering this type of service, what do you find is an average or a range of what a business would pay for this type of service above and beyond the bookkeeping, accounting, tax services that may already be provided?
Okay, so yeah, like let's talk about how what I'll call like best in class Value Builder advisors who are accountants.
Okay,
you do this. Okay, yeah. So here's what they do. Right after the tax return is filed, everything's done. I got to sit down with you, have a conversation with you, Roger, give you the numbers, do the whole thing. Somewhere, either when I asked you for the numbers or after I got everything prepared, I send you that Value Builder questionnaire, that 15-minute questionnaire, and I
Yep.
ask you to complete it.
Yep.
Okay. And I say, listen, it's going to give me a better idea of your business and of how I can actually like help do XYZ. Reduce your taxes. Like, let's name things here that we can do, like with information, right? Like, reduce your taxes, see if whatever the story is, right?
Yeah.
And so they get the business owner to take their Value Builder score, and now they've got the 8 key drivers with a 28-page report with evaluation. They can see whether the EBITDA is correct or not because, you're the accountant, you got all the numbers, so like put it in. And they sit down with the business owner when they give them the return. And they say, okay, let's go through the 28-page report that I just gave you. Here's the value of your business, right? Like, here it is. Okay, here's the value,
Yep.
right? And here's where the gaps are in that value. Now, a couple different ways. If you're interested in closing those gaps, I've got a program that will help you do that. And they present whatever their program is. Usually it's a coaching program. If they're happy, like there's some guys who are really happy to do facilitation of group masterminds and stuff like that. Those kind of guys will offer that type of program to their business owner clients. And that's the offer. Like, that's the time to pitch and the way to pitch something like this. What are they charging? Some accountants charge nothing. Okay, big mistake. Other accountants, they'll charge anywhere from $1,500 all the way through to $5,000 a month.
That's right. I love this. You're right. There are some of the accounting professionals that I interact with that unfortunately are in that advisory space, and they admit that they're not charging for those services. They're just offering the information, doing things. But when you have, and here's what I think is the difference, by the way. I think they have their best intentions and they're trying to do good client relations. And so they're doing one-offs. They're just doing, I'll help you with that, I'll help you with this. There's not a strategic process or program that they're following or implementing with their client that they feel they can charge for. But when you have a program, a process that you can take to the client and say, I can take where you are now and put you through a system that in 12, 18, 24 months, you'll be in a different place as we apply certain principles in your business. And over the course of this, we're going to actually impact your bottom line. We're going to affect your EBITDA. We're going to move the needle on the valuation of your business. And at the end of this experience, you're going to be in a different place because we're going to work on your business model. That's something you can more easily ask for fees because you have something concrete you're going to come back each and every month and deliver with, right?
100%. And here's the thing, by the way, right? Like, they're going to file their taxes again in a year, give them the same Value Builder score. And now you're comparing two scores and looking and saying, hey, like, here's how much we increased in your value over like the last course of the year with the program that we by working with me.
Yes. Yeah. No, this is wonderful because I believe the accounting profession needs this type of thing. This is years ago before I became